All right, hello. My name is Carson, and this is my presentation on the economic effects of the new tariffs as a young investor and giving you guys my kind of insight on that. These new tariffs, obviously, with Trump's presidency, I'm going to try and stay. I'm trying to keep my political opinion away from this. I want to keep and whoever's watching, just kind of keep your political opinion out of the way as well. But we're just kind of trying to focus on the facts, focus on what has been done, what I think is going to happen with the money, with the investing, and all of that. So, yeah, political opinion aside, let's just get into it. All right. So, kind of the background on these tariff policies. So, Trump's goal in office, one of his main goals, his campaigns was he wanted to um, increase tariffs on every country. So tariffs are stuff that's being imported to us, increasing the tax that they're going to be paying on it. It's pretty much taxes on imported goods is what it really is. So Trump wanted 25% for I think March 4th. I think it was March 4th. He put 25% on Canada and Mexico, which was kind of bizarre because they're our neighbors. We've been trading peacefully with them for a while. Obviously, I think we have better connections with Canada than we do Mexico, but nonetheless, it's still a little wild to me. And 20% on China. I think that was mainly automobiles and metals for mostly. And just recently, he said that the Venezuela, if whoever trades with Venezuela for their oil, will be taxed 25% on that as well. And today, actually, I don't know, I haven't looked yet this morning, but as of a few days ago when I did this research, he said April 2nd, there will be automobile tariffs as well. So a lot of different areas in which places and industries will be taxed and tariffed. And so we're going to look at the impacts on all of these. So that graph there kind of goes over the main ones that have been taxed. A little hard to read from mine, but it's whatever. It's whatever there. So companies will see a rise in production costs. So what does that mean? That means, let's say, for example, I'm probably gonna use this example more than once, but Chipotle. They get their avocados from Mexico, probably. Let's say that. Um, so it'll be an imported good, so it'll be taxed more. So they'll have to pay more if they want. If they want to keep their avocados from Mexico, they're just gonna have to pay more for the avocados. And so that'll obviously not be good for Chipotle. They want to cut spending, but they'll see an increase of these raw materials. Um, what else? Like car companies, um, like BMW, Audi, all those foreign car companies will see an increase in tariffs as well, an increase in spending, just because the fact that they're international and they're going to be getting they're not going to be getting their goods, the things that they use to build their companies with not nationally, they get it internationally, so they'll be taxed on it. Continuing on, this is a lot of people believe that this will reflect prices onto us. So the goal for these companies is obviously to gain more capital, to get more money, right? So what do? They get taxed on it. They increase their spending. They don't want to increase their spending, so what do? They increase their prices. And a lot of people reflect that, okay, so avocados were raised 20 cents, so we'll see an increase in guacamole for 30 cents. A lot of people will believe that, and prices have shown that, it's led to inflation in these 4 months that Trump has been into office. We've seen inflation in different areas like gas, especially gas, eggs, eggs have been big. A lot of people have been complaining about that, but unfortunately, this has been splitting the political agenda, the political gap, I guess. It was already pretty split, but now it just feels like it's been growing just because of this inflation. I know a lot of people believe that markets would do really good with Trump in office based off his last term in 2016 or was that his, I don't know. But when he was in his first term, markets did amazing. So yeah, let's move on there. So long term, I think inflation will slow down just because companies and markets and consumers will get their confidence back. They'll adjust these increased prices. Wages will reflect that, and it'll be a lot easier. So moving on, this could cause trade wars. It's not easy telling your neighbors that you want to tax them on all these imported goods. They don't. Obviously, nobody likes that. So obviously, the biggest one is China. We've haven't seen eye to eye with China, and I don't know ever really. I guess, but tensions they've been rising, and they will probably continue to rise. It's hard to imagine that we will get into a full trade war with our neighbors like Canada and Mexico. Um, NATO, which is the no trade thing for a bunch of these countries, or I'm sorry, no war thing for all these different countries. I don't think Mexico is not in NATO. Canada is in NATO, I believe. Um, but it's hard to see that we're going to do a full embargo, which is a full stop on trade with Canada and Mexico. Um, but if we do, it's interesting because Mexico, we've already had our immigration issues with Mexico, and so we'll see where that goes. It's interesting. But for China, if we do get into a possible trade war, it could be devastating. I think I think the U.S. and China are the two biggest for trading internationally. So a lot of different countries will be felt if we clash. A lot of different countries would be hurt because I think if we can't trade to both the same country, I think that would be a little concerning for that country. So stock market, it has been tanking for a few months. It's been tanking for pretty much this whole presidency. It's completely the opposite of what professionals believed. Stock market has completely tanked. Even the crypto market has tanked, which people thought, Elon Musk and his Dogecoin would do so good. Not so good. Bitcoin, not good. But let's talk about just the stocks. So I have pictured that S&P 500 with, I think that was the top one is the month, and I think the bottom one is 6 months. But specifically, I want you to look at the middle and the middle to the very end. See how far that has fallen. A lot of people have been losing their money, losing their investments. It's been hard. No one likes to see red. But these tariffs are not the full blame, obviously, but it's been very volatile. Customer confidence has declined. But I do think it will, in turn, stimulate economic growth because Trump is trying to make the U.S. a more independent nation. What got us out of the Great Depression was becoming more independent, producing more in the country, making more jobs, increasing money velocity, which is just how money moves, how fast money moves within the U.S. That shot us out of the U.S. That shot the U.S. out of depression. And it immediately, it was like after the war, boom, we boomed. The economic, it was stock market exploded. I think that's what his goal is to get more domestic production, which will increase long term the economy. Okay, so final thoughts. I think. Oh, let's talk about the picture first. This is the S&P 500 its whole life. So there's a few blips here, obviously. You have the Great Depression, that first big blip. There was the 2008 housing market recession. It saw a big dip there, and I think one before that was 2003 when the dot-com bubble. But as you can see, it started, and look at us now. We're like to the moon, pretty much. I mean, we're gonna tank. We're gonna have these little dips. I think the U.S. is obviously backed strong by by the FDIC and the Federal Reserve. So I don't see anytime soon of long-term decline in S&P 500, which pretty much shows how the market is doing in total. So yeah, lastly, personal thoughts as a young investor. Keep putting money into your retirement fund. Maybe chill out on the riskier investments for a while. Just see where the market's going. Keep your money in. It will grow over time. The market will not be like this for 50 years. It'll be maybe a year or two, I think, and then eventually it will come up. And we'll see green. We'll see a lot of green, I think, in our future. Fortunately, I'm a young investor. If you're not a young investor, that's still fine. Say you're in your 40s, you still have, 20-something years for your money to compound until you retire. So a lot of time left, a lot of interesting things to think about. Yeah. So thank you.